All right. Good morning. It's February 9th. Today's Thursday, 2023, and it's about 8:30 a.m. Pacific Standard Time. So the market's not doing a lot. It's just basically staying in this channel, and eventually it's going to break out, and it's either going to go this way or it's going to go down. So if the market decides to break up, it'll probably go up into this area, around the 4,300 up in here, before it turns around. I'm assuming that it's not going to do that. It's probably going to start down from this point. And if it breaks down into this area and keeps going, then that's pretty much confirmation that's what's going to happen. So let's see. So I drew this out just for fun, last night. So this drop down right here is the same as this drop down here. The market came up and the spike came down and balanced in there, which it did here. Spike, balanced in there, went up, and it came down. So I made this. I actually made this. And this is kind of a projection of what I see might happen. So that means that the market could probably around March end up pretty close to here. I'm sorry, the beginning of March, the end of February. Could wind up in this area. And of course, then by April, it's down here. And of course, it could come down even harder and faster, but or it could take longer to come down. But anyway, that's kind of a projection of what could happen. So I have March options, which put options, what they're doing okay. They're just they're not really losing value and they're not gaining value. They're kind of just sitting there because it's still a long ways away. And I always buy my options that are really either at the money or close to the money, so they can gain and lose value very quickly. But if the market pretty much stays there and I have plenty of time left, then it pretty much stays, the value stays there. It doesn't lose a lot of time value as opposed to buying options that are way out of the money. So anyway, that's my strategy. So yeah, this is just a projection of what I think could happen. Like I said, by the end of February, could wind up down in here, and maybe even sooner. But and if it does wind up down here at the end of February, then of course I made a substantial amount of money going from here down there. All right, so what's happening with the rest of the market? So Dow Jones still in this balance area. It's been in this balance area since November. Yeah, it's just pretty much sitting in there. It's not going anywhere. It's at the top, so good time to short something when it's at the top of a balance area. And it could mean one of two things. Of course, it's either going to go down, or when it goes up, and if you short, then you can take a small loss and get out. That would be your stop loss, somewhere up in here. So that's the Dow. The NASDAQ is pretty much where the S&P is. It's up in this area, and it's kind of just bouncing around in this little balance. This is a balance area now in here. This is a daily chart. If I went into a 4-hour chart, there you can see the let's see where. So that's the balance area right there. That's where it's at. And like I said, eventually it's going to either break down here or break up there. And if it breaks up, then it'll probably continue up to this line. If it breaks down, then it's going to go down and maybe eventually come down to this area. So again, I have put options on the S&P on ES. And so I'm just, my preference is the market's going to go down as opposed to going up. So, one, I like to call them indicators because I don't really use indicators, but this can be considered an indicator. This is the Russell. And go into a daily max right there. So the Russell, all the other, the Dow and the NASDAQ and the S&P started coming down around 2022 right here. But the Russell actually, they made their top and it started coming down. But the Russell actually made its top before that, about 2 months before that, and it started coming down. So it's ahead of the curve right here. So I kind of look at the Russell because it looks like it's kind of leading the way. And if you look at a 4-hour chart, it looks like it didn't really, it balanced a little bit up here and then it came down where the ES is in a total balance area right in here, where the Russell's down in here a little bit. So there's a Russell. It balanced a little bit here, then it came down and balanced in here. So it is dropping down, and it looks like it might be dropping down before the other indexes, and that could be a sign that the market's going to start coming down. But we'll see. I have, if it breaks this line down here, maybe possibly today, it starts coming down, then I think that's a pretty good indicator. And the other markets will follow. And so that's what I'm going by. Back to the ES. Okay, so here we are. So I'm just waiting again. Not sure what's going to happen today. Probably not a lot. And then we got tomorrow, Friday, the last day, and then maybe not till next week it's going to start heading down if that's the direction it's going in. So that's the plan. So here's a Tesla stock that I had mentioned, and Tesla came up and hit this top up here, made a double top, and I have written here short. So I did buy some put options, and I actually sold them this morning with a loss. Not really good with stocks anyway, but I just figured this would be a good short. Eventually it will, because this thing is going straight up without any corrections at all. The only thing I'm afraid of is eventually when it hits the top, it's going to come slamming down really hard, and that's not good for a lot of things. It's not good for a lot of traders, investors, and it's not good for the economy when things start coming down and they start happening so fast and so hard. You want to have, I know the Feds like to talk about soft landing, but ideally that's what you want to do. And it's probably not going to happen, or it won't happen here. Because if this keeps going up, eventually it's got to retrace, like all markets retrace. And it's going to retrace pretty hard, And a lot of people are probably going to lose money because they think we're back in a bull market, and they're just pushing this thing up. Amazon, on the other hand, never did that. It's actually coming down. I was checking out some stocks yesterday, and some are going up, some are coming down. Eventually, they're all going to come down, I believe, because we're at the very beginning of this recession, correction, crash. So still have a lot further to go. But when you have markets like Tesla that just goes up, you know those are being manipulated somehow, and it's driving all these people in, and then it just comes crashing down, which really isn't healthy, but that's just the way the markets work. Anyway, like I said, I got out of my Tesla. I'm not really a stock trader. I don't really trade options and stocks. If Tesla starts to teeter, I see that it's coming up, then I'll get back in again, because I feel like this is going to be a really good short coming up. And if it comes up into this area, which is the next resistance, draw a line here. The resistance somewhere in that area. It comes up to this line right here. Then I will have to move this up in here and say short it here, because that's what I would do, and then I would get in again. It's already way extended, like I said earlier, but anyway, that would be another area right there, another entry point. And of course I would load up on put options and then just watch this thing just drop. I mean, it's probably going to hit really hard, which those options are going to gain a lot of value, and I'm sure that's the point, that there's going to be the people, what they call the smart money, are going to turn this around, and when it drops, they're going to be buying a lot of options, put options, because options are really big now. A lot of the big institutions are buying them, and when they do that, you're going to see hundreds of millions of dollars being made and hundreds of millions of dollars being lost. But again, that's the way the market works. You just got to know how it works. All right, back to the ES. Market looks like it's continuing to go down. It's almost 9 o'clock, 10 more minutes, and who knows, maybe it jumps down in here. We'll see what happens here in a day. Either way, I'm holding on to my position, and again, if it starts coming down this area, then I'm going to buy more put options. But all we can do is wait. This is kind of the lazy way of trading, because there's not a whole lot I can do. I'm going to start putting in my alerts here. And when the market goes down there, I'll put another one up here and create. So now I can take off. I can go do what I want. And like I said, it's a lazy way of trading, because I'm just waiting for the market and see what it does. It goes above this line and it goes too far. I'm going to get out of my positions, take a loss. Goes down here, I'm going to buy more put options with a confirmation on a 4-hour chart and just write it down. That's it. That simple. Okay, so we'll talk to you tomorrow and see where this market winds up at.